you as the investment banker have to internally build those relationships and find the ones who are out there on the sales desk who align with your interests, if I'm not mistaken.
That is 100% correct. And that's critical. If you do not have a good sales team, you can be the best investment banker, but you're 1, 2, 3 people, you need the team. That's what it's all about. Like in any business, you need the right team.
For an investment banker as an individual, their success, and especially those who are absolutely outstanding, there's a lot of things out of their control. So it's really interesting to think about their ability to succeed and the relationships they will have to manage in order to build that success, one of them being the sales and trading desk.
I agree 100%. That being said, the successful firms are the ones who understand how every function works together and is able to bring them together for that collective success. If you're a banker and you're covering a given field, if you don't have your research properly, which will be used by your sales force to educate the clients, and if it's not a field that is really up the alley of the firm, you're not going to have any success. Because maybe you'll get an M&A mandate here and there where you're doing most of the legwork. But fundamentally, as soon as you get into the capital markets, where you're looking at raising debt or equity or any type of financial instrument you're trying to sell, you need the complement. And that's where ultimately the successful investment banks understand this, and they'll create silos to some extent where every piece builds upon each other and ensures that you've got the right coverage and the right sales team and research to be successful.
We go through 15 years of banking, and then you move on to become a CEO. How did that experience in banking influence your move into the leadership role as a principal and as the leader of a company?
Well, as I shared with you earlier, I'd sort of tasted the joys and tribulations of private equity earlier in my career when the bank had a private equity group. The bank was late into the game and realized ultimately that it was creating more conflicts of interest and took that capital. We had $500 million of capital to invest. We had invested $315 million, but they realized it was creating more conflicts of interest and probably better to leverage that capital by investing in other PE shops, including KKR, Bain Capital, and other Canadian sort of PE groups to get access to the deal flow in terms of IPO, M&A, financing, in terms of leverage finance, and so on. So it was the right strategy for the bank. It made perfect sense. And that's when I went back to banking and always had in the back of my mind that desire to go back to the buy side on the principal side. For me, I was very comfortable providing advice. And it's easy to give the advice. The client makes the decision in the end, and they live up to it. As the advisor, you're just providing advice. But for me, I've always been very comfortable taking my own advice and being accountable for the advice. On the buy side, accountability becomes yours because you're calling the shots in the end. And calling the shots in terms of what you'll do, but the results of your investments and your decisions. So for me, I was ready for that. I was ready to take that leap and roll up my sleeves and build something.